Good afternoon. This is Tom Alexander. It is Sunday, October 10th. This is the pre-market video that accompanies the report that you should have received. If you have not received this report and you're looking at the video because you found it on YouTube, you can go to my website, alexandertrading.com, sign up for the free newsletter, or you can send me an email, tom@alexandertrading.com. I'll put you on the list. So we're going to go through some of the elements in this weekend's newsletter. And I want to start with saying, as I get my charts going here, that as a trader, I don't force trades. And, I'm an analyst as a means to an end, not an end in itself. So I don't force analysis either. The analysis that I use is extremely robust. It's extremely illuminating. But sometimes I don't care what you use. You really can't tell what's going on. The market is not in a level, and there are a lot of if and or buts. And this is sort of one of those times. Now, that being said, I think that certainly by Tuesday or Wednesday, we're going to get a much better idea about this market and its tenor and whether or not that is bullish or bearish. Because right now, I can make a case either way. I can give you 6 or 7 points that are bullish. I can give you 6 or 7 points that are bearish. But that's, it's just noise. So what I want to do is show you what the most important levels are, and we'll let price action dictate. When in doubt, always default to price action. So if you look on my screen here, I have the upper and lower critical swing trade intermediate term key reference areas highlighted by the light blue horizontal lines. The dark blue line is the close from last Wednesday. Now, if the S&P cash, the NDX cash, the Dow cash all close below that level, the respective levels of last Thursday's close, that is immediately short-term bearish, and that would be my orientation. And what that would open up the door for is what is referred to in my auction market parlance is a false breakout trade. And a false breakout trade is a trade when you have a balance area. The market attempts to trade initiatively higher or lower, in this case, higher out of that balance area. And then it fails. And if it fails, typically what happens is the entire balance area that was created prior to the initiative attempt to move out of it, that entire balance area will be retraced in a fraction of the time that it took to create it. That's the definition of false breakout trade. So in this particular instance, using the S&P as an example, now this was last Wednesday's close. This was a balance area. We attempted to break out, or we are attempting to break out. It clearly hadn't happened. Once in a while, you'll get some, sort of a head fake and then a head fake down, et cetera. That's why I say a close by all three of the Dow, the S&P, and the NASDAQ. If that does it, then it's pretty high chance that this is a false breakout trade, and we're going to rip through this range very sharply, very quickly. And if that begins to happen, I'll update again. But that's where we are. Now, on the other hand, and I don't have this highlighted, but Thursday's session highs in all four are also important. And then above those highs, it's a little bit different, because we had some relative strength in the Dow. If the Dow gets above last Thursday's high, it's, again, we'll take a look at this. But, above last Thursday's high, and you're looking at the ES, should reach at a minimum 44.58, 44.70. The NDX then would target 15,282, 15,380. And the Russell is its own animal, which we will go over here. And you can see this is the Russell. This is the profile view of the Russell. And if this looks like I haven't updated my chart from last week. I have. It's just Groundhog Day, day after day, week after week in the Russell. This is an extraordinarily mature auction, and it is going to break extremely sharply one day. I'm watching it like a hawk. In general, anytime you see a move of conviction above this high volume node or below this high volume node, you want to be paying attention for immediate follow through. That's the bottom line on how to trade this. Okay, let's take a look at the technical situation now. Okay, the red line, 10-day moving averages of advancing issues. Green line, 5-day moving averages of it. 5-day moving average of NYSE advancing issues, and then breadth, which is advancing minus declining issues. And breadth is extremely helpful in identifying market turns at lows. At highs, it can be counterproductive to try to guess, okay? And it's sort of betwixt and between here. It's not generating, or the market has not generated the upside momentum that we have seen since March 2020, when breadth has registered a negative 2,000 close or lower. And actually, now this wasn't a negative 2,000 close, but on this particular day, I think it closed around, I don't know, 1922, 1950, but for most of the day, it was negative 2,000. So it's a little unusual to have two back-to-back sessions with that much negative breadth throughout the session, and frankly as little bounce as we've gotten off of this so far. Now there's time for the market to catch on fire. Who knows, we may gap up in Globex and have this another wide range up day, and that will clarify things, and it would imply at least several more days of net up activity. But right now we don't know. So we're heading into Globex, and that's all the objective information we have at this point in time. If something, and it will, if something changes, I'll let you know. Do me a favor, if you found value in this video, please like it. And if you are not subscribed to my YouTube channel, please subscribe. Thank you. You guys have a great weekend. I'll talk to you soon.